So basically today I said we've talked about the other blocks and okay, I don't know if I actually talked about the block. Probably I'll just talk about that in the next class. Does not usually actually have meaning. So talking about we'll be talking about the highs, the equal highs, the lows, and the equal lows. You understand? For instance, looking at this GBD USD. Okay, if you remember the first time we had the class, I said there are three things you should actually look at. You understand? As a trader. This can actually even help you basically if you don't even know the basics about CP or just know these things. I talked about the other block. We talked about the fair value gap, which is the imbalance in the market. You understand? Now, the third ones I was saying then, but we didn't really talk much on, was the equal high, the equal low, the initial high. That will explain the psychology behind everything. So that I will not just tell you the strategy that when it comes to and above this is buy and sell, I will explain the psychology behind it so that when this strategy, or let me say when this smart money concept strategy is not really working so well again, like perfectly 100%, you yourself can actually psychologically think the reason why it's not working and psychologically find a solution to it. Psychologically find the adjustment they did to it so that you still continue making. So that's why I always like people being understanding when it comes to psychological way of all these things. You understand? Let me see if Mr. Ephraim is even around. Okay, Mr. Epiphany. Okay, Epiphany, no Ephraim. I used to call it Ephraim. Need somebody that you actually joined our space. The time we did this space of it in the synthetic versus currency pairs, and just decided to give it a trial. And this morning was my DM. I was giving the testimony. Now I'm sure probably should have actually doubled the accounts from the 50 to 100. So that's just one thing about currency pair. I call myself the king of synthetic indices. But it's someone that is calling himself king of synthetic indices, not running away from synthetic indices. You should know there are something that actually happened. So that's just basically. So going to the main reason why we are here. So for instance, how do we spot equal highs and equal lows? Okay, fine. We all know our resistance, you understand? And we all know the difference between our resistance and our zone. Let me call the zone our supply zone. You understand? You know, the supply zone is collection of all resistance in a zone. You understand? Why resistance is just a line at a particular price. So now we will be using our support and resistance. But now we will not call it support and resistance. We'll call them equal high, equal low. Let's go modern. Let's go civilized. Let's go to the world of institutional concept. Yeah, thank you. So now, this is a resistance, but we'll call it this is a high. And with time, this was another high. When you see two equal highs, what should come to your mind now is how the market makers are actually going to break those equal highs. You understand? Because normal, you as a retail trader, when you see this and you see this, you already confirmed it. Okay, fine. For this kind of thing to happen, then definitely when the market reaches this particular place in the future, there will be a change in direction because it's already verified. It has hit that particular area twice. And hit that particular area twice, and there was a change in what? There was a change in direction because that hit it twice. You understand? That's what they want you to see. And you have seen it already. And now that you've seen it, you understand? So now what they tend to do is sometimes they may tend to break it and the market go upward. Or sometimes they might tend to just like liquidate. You understand? Once the others here, like buy stop loss that might be here. Because normal, you expecting as a retail trader that you want to sell here, you want to put your stop loss above here, right? And you are even anticipating that you want to put your buy stop here now. Both of you, the retail traders, they will smash your head together and go in direction without you guys following. They will liquidate you guys out of the market. You understand? So now basically, with you as a SMC trader now, Your mindset now is the mindset of it breaking it. You're not even looking at the mindset of it coming down. You understand? Anyways, let me say anyways. Don't let me say that. So now, how do we know the particular place, or how do we know if the market actually wants to break it or wants to obey it? You understand? That's when you actually going to look at your point of interest. And we talked about the point of interest in the last class. We talked about, please, can you mute your mics? So we talked about the point of interest in the last class. You understand? So, but I'll still talk about it a little bit today. So now, that's where you actually have to look at your fair value gaps, the other blocks. You understand? Now, looking at this now, basically, I gave the TP2 to be around here, I guess, or TP1, maybe here. And the main reason why I did that was because of the other block that was actually here. And in as much as there's actually equal I here, I still know that there are higher tendencies that the market might want to break this I, and that's why I make my TP2 to be around here. But to be on the safer side, I made it my TP1 to be around here. You understand? So now, definitely this market trying to react here, we actually have to react here. They might just look to go and look for another other block that will push it up. And we have so many other blocks here now. But we don't know the one that's actually going to come for. You understand? There's another block here. This was a bank level left intentionally by the bank makers. This was supposed to be one before, but it came back to mitigate it here. And this is one here. So don't specifically know the one is actually coming for. But either the one is coming for, you understand? This will be our new entry. And my enter, okay, for it, if you actually get here, I'm actually putting 0.01 position. Then when it comes here, I might not put 0.05 position. So I'm actually very sure that when it hits here, it has to react to the probability to break this I. But you just know that is your point, your focus is this equal I have to be broken. As long as it's equal I. Now it's my not tend to like it might not want to react on it to then that means it will change from equal I to equal I's. Just know it has to be broken. You understand? So now another thing that you actually have to look at to be sure that okay, it's actually going to break it is you now look above. And that's what I was saying the other time. Look at the point of interest above. So we have a lot of point of interest here. See another block here. See another block here. See another block here. You understand? In as much okay, fine you. This is a fair value gap around here. If you switch a lower time frame, you actually see that there will be a fair value gap around here. But fine, if this is actually being close tight, then probably you can actually notice the fair value gap. Let's come around here. If you still know the definition of our fair value gaps, I told you the other day that fair value gap has to do with 3 candlesticks. You understand? So now, see the first candlestick here. Can you see? Then the last candlestick is that this is the one, this is the second, this is the third. Then the eye of the candlestick. Let me make this line very well, not straight. So can we see? So it has actually not been filled. You understand? So let's put it here, our FPG, or let's put this in balance in the market. Imbalance in the market price delivery. Yeah. You understand? Then the fact that coincidentally we have our other block around it, we might not call the zone our point of interest. Now you call this your point of interest. If you understand the last class, you know, we then have to put our buy limit. Is it buy limit? Then it should be buy limit. So now conversation TP was it. We have to put our buy limit here. Then we'll put our stop loss above the other block. So now this is another signal. You understand? I pray this signal comes to life today. You understand? So now basically this will be our buy limits. Sorry, sell limits. Because the market has to come there and pick it with us. Sell limit entry at okay. Sell limit at 1.22277. Is that 8? 8. Then our stop loss around here. I didn't even take the GPD USD signal. That's bad for me. And you guys are eating it. Hey, okay, that's not a problem. So now our stop loss will be here. You understand? So we already have a sell signal around it. That's if you should actually break this eye. You understand? Now, one thing about this thing is like it brings confidence in such a way that you just have to wait for your entry. You are sure already of what you are doing. Just wait. You sure? You know, I was saying the other time that we react on this thing and actually come down. So now we don't know where it's actually going to come, but let's just put that okay. We tend to buy around here. We buy at 0.01. You understand? Just to be on the safer side, you might try to buy this thing after knowing all these things, then you might not be the one to work on your winning strategy, because this is just more or less like teaching you on how to trade, where it's going to reach, not actually going to teach you on where to place your trade. I don't know if you understand, but I'm just teaching you some of it now. You understand? So the fact that it might actually get to this place, you understand? I might not want to get here, but we might actually be left out. So because of that, we are sure that after hitting this place, this is the last place can actually come to. Understand? But the fact that we're not sure if it's actually going to be this one, it's going to eat before it breaks out. That's why our entry with a 0.01 lot size here. But when it breaks this eye, you understand, and comes to this other block here and reacts to come back to another block that will be formed around anywhere here, you might not take that time to now buy again at a discounted price of 0.05. You understand? But if you should come here, we'll buy 0.05. Then if you pick this one later, because one will be in loss, obviously, you understand? With 0.01, you know what you are losing. I've actually calculated it. You understand? So 0.0, if you pick it, then you guys will be in profit here. Then definitely when it breaks here and come back to the, and it trace back to another block before it goes up, you might now buy at 0.05 again. That's like 0.1, 0.11 lot size. It's safe trade already. Then we'll take your TP around there. Because if you're actually buying, you're taking your TP here because it actually has to come to this other block. I'm very sure about that. So now we buy at 0.05. But just design your website like that. Just one chart is enough for you. One signal is enough for you. Just be sure about what you are. You understand? So that's that about that basically. So that's that about equal eye and equal eyes because they use the same psychological distance. I've actually explained this. Now coming back to equal eye, that is equal eye that has not actually been formed before. It has not formed equal eyes before. So that's down to do now. Sorry, I'm trying to send a message to the. So that's that about that. This will be our TP around here. You understand? At the same time, to be a sell limit for us to enter. Because markets actually coming here for the GBP USD. Here's the 5 minutes time frame. So yeah. So that's that about that. This will be our TP around here. So now let's talk. I was talking about the low and the high. So same thing applicable to because this is the actually the high. Same thing applicable to if it's actually going to be low too. Let me put it equal high. You can actually denote it as EQH. You understand? If it is high, if it is more than 2, you can put a small letter S or a big, anyhow you want it. The labeling doesn't actually matter. You understand? What matter is you understand what you are. You might tend to say, okay, you want to be labeling your own equal high as P. Nobody gives a fuck about that. You understand? What matters is what you are trying to pass across to yourself, not to any other person. But going with the flow to be equal I, you might put X here. as your initial low. You understand? So now, how do we know? Okay, someone actually asked me a question one time, and they're like, okay, fine. I was trying to say that how do we know, like, candlestick reversal and stuff like that? Those are the least things you look at after our confirmation has been met. You understand? Because there are opportunities to sell, opportunities to buy at the same time. For instance, in a zone, they tell you a zone can be broken. They tell you a zone can be can be can be broken, can serve as a change in direction in price. Yes, you understand. But before you now use candlestick to notice in a zone, maybe it's going to buy, we're going to sell. My brother, you might actually see doji in the zone and to still buy, to still break it. You understand? What you have to look at is your point of interest. Look at your point of interest. That is the place that has higher possibility that the market is actually going to come to. For instance, now I've not actually checked the lower time frame, but me looking at, see now, we don't really have much things now that the market wants to come down to come and do. You understand? Except for the fact that I've just picked 1 and 2 here. I don't know if you understand me, guys. But now, yeah, we have more than one. We have 1, we have 2, we have 3, we have like 4 pure eyes, point of interest. You understand, for the markets. And definitely the market has to come. Yeah. So that's that about that. So what else? So this is a live signal. Let me turn down and share this. Okay, so if you're actually going to be selling here, you can now make all this place, because now, okay, this is where breakout blocks. Now, let me now explain that breakout block. Understand? You can make all this place to be your TP1, this will be your TP2. You don't just pick TP from your head, or you divide the charge by 2 and say, okay, 50% of the charge will be your TP1. No, you don't do that. You use key level. That's why sometimes you might actually see my TP might actually be closer to each other. Maybe from, imagine my TP1 is around here, from here to here is TP1. How many pips? And I'm now putting difference between TP1 and TP2 is not going to be small. Because if this is my TP1 here, and I make my TP2 here, it might be concerned, okay, fine. Why distance between TP1 and TP2 very short? And since entry to TP1 is no, we don't just pick TP. We put TP. See, even though it's 0.0, even though it's going to be points, TP will always be TP. Just make sure when you're picking your TP, you're making it of key levels. Because this bank, this thing, they owns the market, not us. And we're not predicting the future for them. We just want to flow along with them. So anywhere we see their possibilities, we want to caution ourselves and stay out of that market on that particular time. They themselves, they don't need to spend up to like 5 minutes, they're out of the market. All these powerful movements you are seeing is their trade. And after that, they are off. See this one, boom, is their trade, and they went off. After they went off, the market came down again. That's why the market is actually forming here. So now this is a live signal here. There's how to take the picture. Save charts. 2D USD 5 minutes. Okay. So I'm actually even learning how to program into 5 this thing now, programming program. After that, all this idea, you just put it into programming. I'll be sending that both for like nothing less than 100 to 200. Best of luck. Okay. So that's that about that. So obviously, this thing should actually, now let me explain how that breakout blocks work. Now, do you know this is another block here now? You understand? This is another block here. Now, so I tend to believe that, okay, fine, anything that makes this market to come to this high, you understand, it's actually going to break it. Do you know why? Because of this other block here. And these are some of the psychological things you actually have to come to when you're actually trading. You understand? So everything that this market wants to do now it wants to retrace, it should just retrace it now. Because anything that makes it to pass this zone, yeah, it's going up here. Because now talking about breakup block, let me now explain using a clear chart. We all understand how the other block works already, right? You understand? Okay. Let me use, okay. Maybe a chart was going, it was coming, 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 and stuff like that. Okay, definitely. The market coming here to this point, let me say this market for coming to this point. You understand? Maybe it came to mitigate the other block around number 2 here. You understand? Maybe it came to mitigate the other block the number 2 here before it moves. You understand?
That one now for people where they trade fusion, I don't they get that bonus. Just use you get email, active email, where we say use email.
So now, maybe it came to mitigate this other block here before the powerful movement. You understand? Now, I said that how the other block works is that the market actually has to come, then it's actually going to react to it and go try to it. But at the same time, it can actually break it. You understand? That's why they will now call it breakup block. So now, if we should break it, what will happen is we go in something similar to when there's a breakout in supply and demand or your support and resistance. That's actually what's actually going to occur too, coming to the other block. But it's actually rare, like 20% when breakup blocks occurs. You understand? When breakup blocks occurs, just know that there's something more to hit. You understand? There has to be another other block close to it, the other way direction. Because this is the market maker. To me, I believe this is the next strategies the market makers will be using. So you just have to know about it now. So that when they tend to start doing it then, you won't be shaking because you already understand how the thing is working. You understand? But till then, if you don't understand it now, till then. Okay, now. So now this is how it actually works. It might actually break the other block below. I was saying this will be your entry here, and your stop loss will be below it. You understand? The main reason why I said below it is that means that market does not want to break that other block. That's why the stop loss is always below the other block. You understand? And immediately it actually breaks the low of the other block. That means this is already a breakup block. So what actually happens most time is that when there's a breakage in that kind of thing, what actually happens is, let me signify where the low of this is the low of the other block here. You understand? When there's a break in the other block already, if there's a break in the other block already, what tends to happen next is that it might actually it's not even it will come anytime it wants to retest. It has to retest or mitigate the other block. It might not actually be a visible, it might not actually be a visible, it might actually not have to be a visible so now what tends to happen, it might not actually be a visible, let me say a visible something that maybe it will now show that it's curved to came to my text. It might still be the next candlestick that might actually come to mitigate it. You understand? So now it's just advisable that when you want to do this, just notice that when there's a breakage in it, look for the next candlestick or any candlesticks, just be monitoring the candlestick. When it gets to this tip of the other block, what's just trying to pass to you is that the market is going in that direction. You understand? That's how the breakup block works. I don't know if you understand what I'm trying to say. Let me pick brush. Okay. So it comes like that. I hope you understand. So that's it. This is the other block here. It's broke it. That's to retest it with a wick or candlestick. You understand? So this is called the breakup breaker block. That's the difference between it and the other block. You understand? So it's already a breaker block because you actually broke it. Then if you respect it, it's called an other block. So now, so we have two types of breaker block. We have the bearish and the bullish. But same psychology, that's what we're actually going to be using. And it's already reacting on the other block. So this strategy is just like more or less like simple, guys. Like it's a win-win. It's a win-win. So now look at it now. This is the other block here now. So if I'm saying that the market should break this thing, you understand? It might just use this eye, or it might not even be this eye. It might be this eye. Any eye it wants to use. You understand? Definitely, most people psychologically now, these people already knows the way we think. That okay, these people already know about smart money concept, but still let's find our need to maneuver there and shake some people off, if not off, so that we can actually meet. So now that's where the psychology has to come in, that you have to know what you are doing. You understand? I can teach you this thing, but you yourself have to be the one to work on your psychological thinking. But the way I'm actually teaching you now, I believe that wants to the go. You understand? Now, it's breaking into that block. It's actually now react from this place to come and mitigate this breaker block. That's if it's going to be a breaker block. Oh, we should break it. You understand? This anticipating breaker block. Let me use that word. Anticipating breaker block. Then it comes here to take our TP, or it might break this directly. Then comes to this eye. You understand? But when it comes to this eye, do you know buy stop will be taken already? Yeah. That's actually going to be what's actually going to happen. Either of the ways, anyone that wants to happen. But I'm believing that it should actually come here before it comes here. It shouldn't react on this line. Because now, everybody wants to put their buy stop here. People want to put their this thing here, their stop loss here. So it has to be the buy stop. It has to pick the sell. So it's their people taking their sell here, put their stop loss here. People putting buy stop here, put their stop loss here. So it has to pick all the others, then come like this before it goes like this. So that's actually what's going to happen. 100% sure. No capping. I ain't capping. If this is going to be the other block, this last bearish, if they should move up like this and break it, this will be our other block. And definitely this will be our entry. Another entry for buy signal. I don't know if you are feeling me.
Yes, we are.
You understand? So, and that up place, this place, be our TP. Most times you don't even need to come here. But no, man. You can take your TP here, use your lot size. That's why you see some people using 100 lot size. It's not that they have the mind or they are risking it, because they know what they are doing. Oh, sorry guys, I don't know what to actually have. So, cannot minimize this noise when you are recording. Oh, sorry. But it's not sharing my screen anymore now. If we save the last class like this. So basically that does that about that. So that will be all for now. So now, can you see it's actually moving powerfully now? So we might tend to believe that this will be our next entry. You understand? For the buy. Another entry for the buy of the GBPUSD. Can you see what I'm saying now? So let's spot this out. That's if it's going to be. So that's about that guy. So let's wait. So till evening when we come back to talk about the profile accounts. So then.